Hello, this is Martin here from seekedge, the channel for learning about trading and investment. Welcome to another episode of Daily Market Technical Analysis Show, where we're trying to analyze what happened in the market today and how and what we can look forward for tomorrow, which is July 28, Wednesday 2021. So, as we do every day, we would be looking at all of those parameters that is listed on the left side: the candlestick, price action, Bollinger Bands, support, resistance, momentum, divergence, trend, and all of this from the charts. We will also look at the open interest analysis and also the global clues and the FI participation in the volatility, and we'll wrap it up. So let's get to the charts right away and see what exactly happened in the market. So this is the Nifty 50 index chart. What do you see here? The candlestick pattern is clearly bearish, right? A wide range bearish candle pattern on the Nifty, and on the Bank Nifty you again see a very clear good range bearish candle. Let's see what happened intraday. You'll go to the lower time frame and it's a clear trending downwards day, except that the morning it attempted to trap the bulls and did move up, consolidated, then it was trending upwards. By the end of the day it recovered a little bit. So total of 80 points lost in effect, and Bank Nifty is 150 points. Bank Nifty also behaved similar pattern. In the morning it gapped up, right, and then trapped all the bulls, and then it constantly fall down, attempted to recover a little bit and then fall down. So that was what happened today. If you look at the fall, where the total fall comes to around 180 points of fall actually happened, right? If you look at from the high, right, and there was hardly any the recovery recovery effort was only 70 points, right? Bank Nifty, if you see from the top, we see that it's it's near to 470 points dip, and the recovery attempt was not even half of it, right? So that's the price action. It was a trending down move. There was an interim attempt in the afternoon to recover, but it again failed and it went back, right? And the morning it trapped the bulls by gapping up, right? Same thing happened in Nifty also. So let's look at what are the levels that we can see. Why is it behaving like this, right? So as you can see here, it is doing a zigzagging since the beginning of the June, right? From very long time, right? From a very long time since June begin, it is consolidating and it is doing zigzagging, and it did nothing but the same thing. It came to the resistance zone, the same resistance zone of 15,900 and 15,800, that level. It hit there yesterday, it could not move up. Again today also it attempted and it could not, and then it fall down back, fall down heavily. So this is happening since so many times. 1, 2, 3, 4, 5, 6. If you see the zigzag stop only, so many times it has been doing the same. In the case of Bank Nifty, it is not even attempting to go to the next resistance level. It hardly went slightly before above the previous doji uncertain candle, and then it gave up and then fall back right on the support zones of 34,700 and 34,300 support zones. So the resistance is clear. 35,500 to 35,800 is the resistance zone. Upwards you have 36,500 levels, and then you have all-time highs. So a lot of resistance are for the Bank Nifty. And Nifty, the resistance, it's all at 59, 50, 16,000 levels, right? So that's the support and the resistance. Bollinger Bands consolidation is very clear, right? Nothing but consolidation. Bollinger Bands volatility is consolidating and contraction skews. That is what is happening since a long time. An interim attempt is there on the expansion of the volatility, but nothing survived, right? So now let's get on and see what is the momentum. What about the momentum? What has it changed? The momentum, nothing has happened. It's remains sideways, right? For the Nifty and the Bank Nifty, right? It's sideways and then momentum is coming down. What about the trend? Look at the trend. Trend has crossed over earlier today. It is in the bearish zone for the Nifty, and this because it's already in the bearish zones, and it is the bearishness is slightly reduced in Bank Nifty, you can say, but Nifty is heading up and is clearly crossed over yesterday and is clearly bearish upwards. The bearishness strength is low, but it is clear bearish zone. Bank Nifty also bearishness strength is little, the bearishness has come down in general, and it is at the reasonable strength, right? So that is what ADX and RSI, the momentum and the trend indicators, are telling us, right? Both momentum is sideways and the trend is bearish on both the indices. So that's it from the charts, and let's get into the open interest and futures and then see what happened in Nifty today. It was clear short build up on Nifty, and Bank Nifty also we can see that it is clear short build up that happened today. Let's look at the open interest of the options data, and then for the 29th month July monthly expiry, we can see that the PCR has dropped a little bit. Yesterday was 0.9 something, now it has dipped. PCR, the put call ratio is dipped, and for the Nifty, the resistances, lot of resistance building up at 800, 900, 16,000. It's like a fort of resistances. There is no way that 16,000 can be cracked unless there is a very big move that happens in just 2 days that is left for the monthly expiry. So most likely the max pain area would be 15,800, or it could give up and then fall, right? So the support zones highest is seen at 700, 15,700, and then 15,500, but the highest put writing is still at 15,000, which is quite far away, right? So highest call writing is 15,800, right? So that is the action in the what the open interest is showing today. If you look at the change in open interest on the bottom side, below that change in open interest showing huge buildup of resistance that's happened at 15,700, 15,800, 750, 800, 850, 900, and 6,950. So this entire thing got is the change in open interest that happened today. Now, what about the Bank Nifty? Bank Nifty for this expiry, monthly expiry, is having the same put call ratio as 0.74, which is not bullish, slightly bearish in the case of Bank Nifty also, and the highest call writing is happening in 35,000. That is the same yesterday also. Highest put support, put writing is seen at 33,500, which is very far away. Then we have 34,000. Then we have some good writing at 34,500. But the big fight is going to happen. The major resistance is at 35,000, right? So right now it has given up that, and it is at 34,800 levels. It may attempt to conquer this 35,000, otherwise it would be losing the 34,500, and that is the open interest data that is showing us right now. What do we see? Volatility. VIX has shot up today, right? India VIX had hit the all-time lows of 10.4 levels, 11 below. Look at the closing prices. You can see that it had hit the 11.7 levels closing basis, and then you can see that it shot up and it spiked, and then it has reached 13. So it is third time in the July month that it is trying to spike upwards from the bottom levels of 11.6, This can continue. No, we never know, right? This can continue, or it can again drop back, and it can hover around this period, the wicks between 14 and 11 levels for a long period of time. That can also happen, right? Or it can shoot up from here. So it all depends. But we had a good spike of the wicks that happened today, right? So whenever market falls, wicks shorts normally shorts up. So now foreign institution data is something that's going to be very interesting. So what we see here is that the foreign institutions sold 1,459 crores today also. Yesterday 200 and 400, 2,400. Today 1,005, near to 1,500 crores, right? And today also 730 crores was bought by the domestic institutions, but still it was falling short, and that's how market crashed. So if you look at the monthly data, you can see that 16,200 crores only in July was sold, and 12,400 crores was bought, right? So this is the kind of selling that is happening from the Fyers side, which remains to be a concern, right? So let's get back into what else do we see, right? So let's look at the different sectors, what happened. For that, we go to the heat map of the Nifty and see what happened today. So today IT performed, and then some bank services performed. Which of them? SBI and right? It's only SBI and HDFC slightly, and ICICI Bank. So but financial services, NBFCs like Bajaj Finance and life insurance, SBI Life, also Bajaj Finance companies seems to have done a little bit. IT, it was emphasis only, no, but there is no, and L&T technology services. Metals performed today. Metals, Tata Steel and Hindalco and Jindal Steel, and all metals except for Vedanta, every metal stock performed. So the metals did well today. Consumer durable FMCG also seems to have performed, with Jubilant Food and Trend performing. So basically it was the buying has happened in these areas. IT, there is consistent buying that is happening. Right, metal seems to be moving a little up. Let's look at the charts of this and see if we can study something. So Nifty IT is bullish zones. We already know that. We also know that there is a divergence, momentum divergence, which is bearish, which could create some kind of correction, because it is always the price has been moving consistently up, and the momentum seems to be consistently falling down. So there is a due pending correction that can happen any time, but it is right now at a bullish zone. It has to be traded carefully. Today's candle also, if you see in the IT index, you can see that it is like a spinning top on the top, right? It's not good. Previous day's inverse hammer, which is also not, it's bearish. So metal performed and jumped into the bullish zones today, right? You can see that green candle, but it's kind of spinning top kind of green candle, spinning top which is green. That means there is equal amount of bullish and bearish pressure, but it has climbed into the bullish zone. It's a good thing, right? So metal has turned into bullish. It is already bullish. Auto is continues to be bearish, and it is broken the neckline of the daily double top pattern, and the weekly double top is what is going to happen, which is also close by, right? So pure bearishness is happening in auto. Pharma, there is something big that happened today. Pharma had a bearish divergence, and that bearish divergence seems to have made this big fall, right? This is huge, 6%, around 6% of fall in one day. Such a big candle which wiped out the entire profit of 3 months. The 3 months of rally that happened is all gone one single day, and this is what happened. The momentum had a bearish divergence on the daily. That's pharma getting into the bearish zones, right? They almost gone below the sideways zone also. So auto and pharma is in bearish, metal and IT bullish, and FMCG could not break out from the W pattern, double bottom pattern, and it is seems to be hovering around that and slightly slipped into the sideways. But overall, bullishness can be maybe still left there. Reality also is like kind of it's a big rounding pattern that probably might have broken out on a weekly time frame, and it seems to be consolidating after the breakout, right? That's what reality is all about. So that's a wrap up. IT, metal, and FMCG is kind of bullish, and auto and pharma is turned bearish. Reality also is bullish, you can say, right? Along with IT, metal, and FMCG, right? So that is how the sectors are there. Let's look at the USDINR. How is the rupee performing, the currency performing, right? So you can see that it had slipped outside of the channel after making an attempt to hit on the channel top, right, on the USDINR, and it seems like today it has a wide range green candle where it bounced back, right? So dollar has strengthened today. Now, if you look at oil, oil is shooting up. It had a small dip and then it completely recovered, and it continues in the 73, 74 levels. Right. So what happened is the gold is consolidating on the upper half of the long channel, and it may be consolidating at a major support zone. Right. The two lines that you see is a support zone, and looks like that support may hold, and it may slowly move up to the channel top once again. So that's what the gold, INR, and oil doing. Now, if we look at the global markets today, we can see that it has turned red. Nasdaq, as of now, the time of recording, it has fallen 200 points, 190 points. Dow Jones is also slightly bearish, and the S&P 500 is also 25 points down as of now. So we'll have to look at these US markets before the pre-market, and then only take an adjustment, because it may recover after some time. We don't know that, but as of now there is slight bearishness, not slight, good bearishness that can be seen in overall the US market, right? So that's a wrap up of pre-market analysis that we are doing for tomorrow's trading. So just to summarize, we can see that resistance has hit the index, and it continues to be doing the zigzag, going up 500 points, coming down 500 points. So right now it has hit the resistance and then fallen down once again. Whether the indices will take the support zones and hold there, and continue to bounce back as it used to go do before, or would it break that one more than 1 month of consolidation band? Will it break that support zones or not? The only question, that answer to which we do not know. So it has to be trade with caution, right? So positional players would have to consider 15,000 and 15,500 as the nifty support zones. Any breach of that would mean that the trend has changed, right? For intraday, no, the movements are you just have to take the trade only if you see a trending move or a close or a green candle above the previous day's high, right? Similarly, a short trade is for the intraday is only if you see a red bearish candle below the previous day's low, right? So it has to be pure price action based, stop losses tight, and that is how we have to play, right? So since the VIX is has shot up, there's a chance that it can come down, or there is also a chance that it can shoot up further up, right? Because it's all in the below 15 for the below 13 kind of levels. So there has to be caution on the spikes in the volatility, which is creating a lot of damage for the intraday traders. So trade with caution, whether it is positional or intraday, because of the particular nature of the VIX that is seen in the market nowadays. I hope this video of 25 minutes would give you a basic understanding on and a reconciliation with your understanding and another person's understanding, and then gives you an overview on what happened in the market today and how you can plan to trade tomorrow, right? So if you like the video, gentle reminder to please click the like button, subscribe to it if you are not done, and share it to your friends, colleagues, and everyone who you think may be benefiting from it, right? This will help us keep motivated to come out with better content for you. So that's it. Happy trading and happy